Hi guys, welcome to my channel Rubber Capital, and in today's video we will be looking at how to master top-down analysis like a pro. But before I continue, I would like to clarify one thing. I am not a financial advisor, and whatever I say here or show you here is of my own personal opinion and should not be considered financial advice. So do your own diligent research before you place your real money, your hard-earned money, into trading, because trading involves risk and you can lose all of your capital. Okay, having said that, let's dive down into the business of the day. And if this is your first time of visiting my channel and you have not subscribed, please smash the subscribe button, hit the notification button, and like. Also comment so I can know your thoughts, the kind of videos I am to do here, so that it will help you improve as a forex trader and even a crypto trader. So top-down analysis. What is top-down analysis? It's simply a kind of technique that one analyze the market from the higher time frame down to the lower time frame. Okay, now your choice of higher time frame depends on your style of trade. If you are a swing trader, you look for maybe starting from the monthly or weekly as your higher time frame, and move down to the daily 4 hours and the 1 hour maybe for execution. But if you're an intraday trader or a scalper, your higher time frame could be a 1 hour chart. Okay, it is subjective. Whatever you use as your higher time frame, what you are saying is that you check the higher time frame, you look at the time frame below it and the one also below that one to determine how you are going to take a trade going from there. Okay, so as for me, what I do is simple. I look at the monthly time frame first, but in the monthly time frame I don't really waste time here. Okay, because the price data are too far from the current price. The price data way back, you look at the monthly time frame, you have 10 months away, 1 year away, and so on. Those price data are just too far for me to really analyze and then have a better look or outlook of the market. So, but if there's anything for me to look at, I only want to gauge the overall direction of the market in the long run. Okay, and also build a story around it. Now let's look at this pair here, the pounds US dollar. Now looking at this monthly time frame, you can see that over the past couple of months or years, the pounds has been in a downtrend. Okay, and we are yet to break major structure. We are yet to break major structure on the monthly. So in this case, I will still be bearish on the pounds. Okay, I will still be bearish on the pounds until this line here, this structure here is broken. Okay, that's what I just look at the monthly for. Now before this structure is broken, I will be bearish. I will be looking for a weakness in pounds, try to short the market down. That is looking at only the monthly. Okay, once I do that, I know that okay, now overall the pounds is bearish. Okay, then from there I'll look at the weekly. Weekly is where I start my major analysis. This is where I start my major analysis. Okay, I look at market structure and if there's any break of market structure, just like in this case here, this is the monthly. I'll move down to the weekly and observe what price has been doing in the past couple of weeks. Now looking at this, we can see that the pounds went down to this level here, that is March 2020, probably because of the coronavirus. Then it rallied up to this point, but it couldn't break this high here. So therefore the low becomes a target. Therefore the price swept the low, went up back, but did not have enough momentum. Okay, so currently the pounds, as I said, from the monthly is bearish. So what I will do is I will look for a setup here. I don't look for setup in weekly, sorry, but in the lower time frame I'll look for a setup to see if I can short the market. And also, when a market is in a bearish situation, that doesn't mean you only look for sales. You can counter trade, you can counter the trend if you have a good buy setup. I will show you that here. So once I look at the weekly, I will identify my supply and demand zone. Okay, in this case, do we have any supply and demand zone? Yes, I can see one here. I will explain what a supply and demand zone is. It's mostly supply and demand zone. 1 minute. Please. Okay, right, I was struggling to bring out the color here to remove the opaque color. Now I can see that the price has bounced off a sub demand zone. Okay, a demand zone is simply an area where price where orders have been stuck in order to push price upward. So looking at this area here, this is a demand zone. Price came in here and then is moving upward. So with this momentum here, with this momentum, I can see that I'll observe and see if this push will break some minor structure. Okay, and where will I see that? In the daily time frame. Okay, when I get to the daily, remember we started from the monthly, to see that the market needs to break this level here before we can confirm our bullish strength. But in the meantime, the market is bearish. So now it came into an hidden base here. This is an hidden base in the monthly, which is simply an order block or a demand zone in the weekly time frame. So now price gets in here and is rallying up. So once I'm done looking at the point of interest, I will identify the high and low of the weekly chart. Okay, the weekly chart. Now this is the swing high, this is the swing high here, this is swing low. So bear in mind that I only buy at discount and sell at premium. As long as price is below, this 50% Fibonacci level, I will not sell. Sell will not be appropriate here. That is from the weekly perspective. I want price to get into this area before I start looking for sales. Okay, so right now as it stands, I'll be looking for a buy scenario from the weekly perspective. But mind you, when I see a good sell setup, I will take it. Now once I'm done with that, I then look at the daily. What am I looking for in the daily time frame? Okay, let me get rid of this Fibonacci. We'll go down to the daily. Now from the daily, what are we seeing? First of all, I'll look at market structure. Let's see what the point here. First, I'll look at the high and low of the daily, then also look at the market structure. I'll look at the market structure, the high and low of the daily. This is the high of the daily and this is the low point. Let's put our fib here. Now in this case, from the daily perspective, the price is above 50% level. Okay, so that means if I see any good setup here to sell, I will sell. Now don't be confused. Okay, the market is fractal. The market the price don't just move up in a straight line. The price don't move up in a straight line, it moves in a zigzag manner. Okay, so that means along the way you can see long opportunities, you can see short opportunities. Okay, so now once I've identified that, I will look for my point of interest in the daily. So in this case, this is my point of interest here, the current point of interest. The rest have been smashed. Okay, there's one here, price reacted down and then move forward back. So we have this point of interest here, an hidden base. This is what we call an hidden base. Okay, or a two candle kissing. So I will wait for price to go into this point, identify my point of interest. The point of interest could be an OB, it could be an order block, it could be a fair value gap, it could be a support and resistance, a supply and demand, it could be a liquidity void, and so on. Okay, if you don't know what this means, I will create new videos to explain all these concepts, the order block, the fair value gap. If you need it, just comment in the comment section and tell me which one you want to learn first. Is it the order block, or is it supply and demand, or is it the fair value gap? Just let me know in the comment section and I'll do my best to shoot the video on that so that you can learn as a trader. Now once I'm done with identifying the daily point of interest, a point of interest doesn't mean I'm going to sell the moment price gets there. No, it simply means it's a point I'm going to be observing the price and see how it reacts. Okay, now looking at this particular point of interest, when price traded into this point of interest, it reacted down. That shows me that there could be something that is repelling price from that level. Okay, so what I will do is to go to the hourly. Okay, now what I do with the 4-hour chart is simple. In the 4-hour chart, this is where I generate my trade setup. Okay, this is where I put together my trade setup and I'm ready to pull the trigger once I see an opportunity. I also look at market structure. Then I will refine the point of interest from the daily. Now this is the daily point of interest, so I will go to the 4 hours and see if I can refine that point of interest. Okay, I can refine that point of interest, so I can refine it to this order block here. So looking at this order block, the price hasn't touched this, so I have to wait for price to trade into this. Actually, this is a trade I'm really looking at for the coming week. Okay, from Monday I will look at it and see how price react in here. Okay, now when I see a rejection in price, what I'll now do is to go to the lower time frame. I'll go to my lower time frame, like 1 hour. I'll move to the 1 hour and see if I can still refine that particular point of interest. You can see we still have an order block in the middle here, another block in the middle here. We still have this other block, so I can also include this on my chart. I can include this. I will not remove that of the hourly because sometimes price will not trade into this other block, so it's not an holy grail. Okay, price may not trade into this other block, but I will just put it there. Probably that's where I want price to get to. Okay, and I'm waiting for price to touch this 4-hour order block. Now when price touch the 4-hour order block, I'll then go for my 15 minutes. Now what do I do in the lower time frame? In the lower time frame, like 15 minutes. Let me see if I can type here. In the lower time frame, like 15 minutes, this is what I do. 15 minutes. Number one, I refine the point of interest. Why am I refining the point of interest? So as to have a lower risk, because I don't want to risk more than 20 pips per trade. So working with the lower time frame gives you the ability to have a setup that can have a stop loss of 20 pips. Now, what do I mean by stop loss? Where do you place your stop loss? I place my stop loss at logical areas. Let me explain what I mean. Now, let's assume the market is moving like this, okay, and there's a break of structure here, and price trade into maybe one of my other block here. Now, this is what I will do. Yeah, this, if price comes in here to trade into my order block or anything here, my stop loss will be above this eye. That is a logical place to place my stop, above this eye, because when price move above this eye, that means it has invalidated my setup, because I was expecting price to continue downward since it has broken structure here. Since price has broken structure here, so I was expecting price to do what? To go down from here. So I can take a trade here and then place my stop loss above. I can take my trade here. If there's any reason to do that, then I place my stop loss above. So what the lower time frame does is to give you a place where you can put a logical place where you can place your stop loss, and that logical place can give you a very comfortable, like a very small stop loss, like 10 to 15 to 20 pips, okay, and that will help you to increase your risk to reward. So that's what I do, and that's what most smart money traders do. They look for setups that have an insane risk to reward, So those are the things I'll be looking for in my lower time frame. Number one, I'm going to refine that point of interest. Okay, I'm going to refine that point of interest. Number two, I'm going to look for a break of market structure. Okay. Number three, I'm going to observe price behavior. Towards the point of interest. Okay, I will see if the momentum towards the point of interest is a strong momentum or a weak momentum. This is what I mean here. Let's assume you have a point of interest here. This is a point of interest to sell, and price start approaching that point. This is what I'm expecting price to do. I'm expecting price to do this, to slow down momentum towards that point of interest. Okay, when I see price doing this, I'll be more confident to take the trade once price gets in my point of interest. Okay, I'll be more comfortable and confident to take this trade because price is approaching there with a weak momentum. So that means building liquidity along the way. So I'm expecting price to do what? Once it gets to this point, I expect price to what? To move down. Once price gets here, I'm expecting it to move down. Okay, this is what I'm expecting. The momentum should be what? Weak towards the point of what? Interest. The momentum should be weak. When I see price go this way to the point of interest like this, strong momentum, I will not take that trade. Okay, that means there have been another demand somewhere here that has sponsored this move. Probably price have accumulated around there and push price upward in order to break this. So I will not take this trade. I will just observe and see if there's be a reaction. If there's a reaction, then I will look for a trade. But if there's no reaction, most times from my experience, price will just break through that point of interest. Okay, so you have to look at the behavior of price. I will also create a video to show you the different price approach strategy, what and what you should be looking at in order to have confidence in your trade setup. Okay, in your trade setup. Now let me delete this. Okay, so what else do I look for here? Okay, I'm back. I got a call from my wife, so I have to attend to that call. Very important. Okay, so I haven't gone looked at the point of interest and how price approached that my point of interest. I will then look for the trade setup itself, where I look at the risk to reward. This is where I calculate my risk to reward. Okay, I look at the risk to reward in American English. Risk to reward. Then I also look at my trade management, but most of my trade management will be done on the higher time frame. When price breaks critical structure on the higher time frame, I will go back and see if I'm to exit that trade or not, or if I'm to move my stop to break even and so on. I have different strategy on how I manage my trade. This also I will create a video to explain more. So these are what I look for in a lower time frame. The lower time frame what I work with is 15 minutes, 5 minutes. Okay, sometimes I look at the 1 minute depending on how clean the price action is. If the price action is not that clean, I may not be able to see anything on the 1 minute or on the 5 minutes. So I might stick to the 15 minutes. But if it is clean enough for me to go down to 5, 3 and 1 minute, I will do that. And from there I'll put my trade setup and then pull the trigger when price comes in there. Okay, now let's go back to our chart. Now in this case, now what I'll be expecting price to do is to come in here, and then on his way down there should be a break of structure. When there's break of structure, I identify that point of interest that created the break of structure, then I pull the trigger. Now let's see, let's look at, I think I took a trade somewhere here. This first place here. Now let me use the replay. Now in the 4 hour, so let's quickly do a quick top down analysis from the daily here. So this is an hidden base, that is a point of interest. I'm going to do a video breakdown of the trade I took here. So that is our point of interest on the daily. So we go to the 4 hour to refine that. On the 4 hour, we have this hidden base as well. So we wait for price to come in there. When price gets in there, okay, I then look at the 15 minutes time frame. Okay, we observe 15 minutes time frame. What are we looking for here? We are looking for a break of structure. Here. We're looking for a break of structure. Okay. So let's see. Price is moving up. Let's pause there. I think I'm messing up. Yeah. I think there's a break of structure. Yeah, good. There's a break of structure. Yeah. What was the move that sponsored that break? This particular order block here sponsored the break. So what I will do is I will also price tap into that and then went down. So you can see now when price get into this, when immediately this break happens, yeah, immediately I see this break here of structure, I will then do my create my setup here, a short setup from the open of that candle to the top of that candle. You can see that in this case I'm only risking 9 pips, 9 pips here, and I can decide to take my profit at this level here at a 1 to 3 risk to reward, or you can hold your trade further depending on your setup. Okay, so when price goes in there, it went and tap into that, you've already banked yourself a good 1 to 5 or 15%, 5% of your account balance if you miss 1% per trade. So you see, that is how I do my top-down analysis. That's how I do my top-down analysis. Okay, I monitor the chart from the higher time frame down to the lower time frame, and also there are some key things you need to know. Okay, when you are trading, when I trade, I only trade London and New York session. These are the time of the day that I trade. Anything outside this time of the day, I do not trade, because from experience I've noticed if I trade outside this zone, whatever setup I have will be manipulated, because the Asian market is a market where manipulation of the market happens. It moves in a range, in a consolidation. So therefore, whatever setup you have, most of the time will be invalidated because of the manipulation. So I stick to London and New York session only. Okay, that's all on this. I hope you have a good understanding of how to do the market top-down analysis in the forex market. Let's do some recap. Monthly, in this monthly year, I do not waste much time here because the price data are too far, and if I'm to look at it, I'm only looking to build a story. Is the price bullish or bearish in the long run? So I have that at the back of my mind. But where I do my main analysis is the weekly time frame. In the weekly time frame, that's where I do most of my analysis. I start here, I look at the market structure. If there's a break of market structure, now what do I mean by break of market structure? If we have a downtrend like this, okay, and we have a break, this is a break of market structure. Yeah, that means the market is looking to reverse. Okay, the market is looking to reverse. This is what I'm looking for, a break. If there's a major, what is the recent market structure break in the weekly, and where is it coming from? Is it coming from a downtrend or it's coming from an uptrend? Then what is the move that sponsored that break? Okay, that is my point of interest here. There's something in here that sponsored the break, or somewhere here, okay, that sponsored that break. I will identify that so that when price retraces back into that area, I'll then look for my trade setup to come in, and I'll do that in the daily. Why is everything so messed up? I'll do that in the daily and 4 hours. 4 hours where I build my trade setup, look at the current market structure, and then refine the point of interest from the weekly to the daily and down to the 4 hour. Then where I execute the trade is on the lower time frame from 15 minutes down. Sometimes I execute my trade on 1 hour if I have the setup is clean enough. So from 15 minutes down, I will further refine the point of interest, and I will also look for a confirmation, a break of market structure in the direction I intend to trade. So that's all. that you need to know. Top down analysis simply means looking at the higher time frame, analyzing it down based on your style of kind of trade. A swing trader looks at the monthly, weekly, daily, 4 hour and executes probably on the 1 hour. An intraday looks at 4 hours at the higher time frame, then work it down to 15 minutes or 5 minutes. A scalper can look at the 1 hour as the higher time frame, then work it down to 5 minutes or 1 minute to take its trade. So remember that the key thing is that your higher time frame must be in line with the lower time frame direction as well. Or let me put it this way, the lower time frame direction, if you are to buy, let it also be in line with the higher time frame buy direction. That way you have a high probability of winning that trade. So on that note, we will end the training here. So if you are yet to subscribe, please do subscribe, hit the notification button, and feel free to comment and let me know your thoughts on this video. Take care.